National insurance is one of those taxes that for some reason a lot of self-employed people seem to forget about. It is at a much lower rate than normal income tax, but if you're not careful you could be faced with a hefty tax bill later down the line, so you do need to be prepared for it. In this video I'm going to tell you what national insurance is and why you might want to pay it voluntarily even if you don't have to. A tax that you pay voluntarily. Hiya folks, welcome back. I'm Andy Mack and I've been self-employed for pretty much all of my adult life. As per usual, I'm not an accountant and I'm not qualified in any way to give you tax advice, but I'm just going to be explaining some of the basics that in my view you should really have been taught in school. When you're self-employed, there's essentially two taxes that you're going to have to pay out of your profits. That is your income tax, which we've talked about loads before, and national insurance. For simplicity, we're going to say that income tax is at 20% and national insurance, or NI as it gets called, is at 9%. Whether you're employed or self-employed, you need to start paying national insurance from when you reach the age of 16, and you're going to pay it on either your employed or self-employed income all the way up until you reach state retirement age. Now, at the minute, state retirement age in the UK is 67, but that does get reviewed from time to time, much to the disgust of people who are just about to retire. National insurance goes towards things such as your state pension, employment and support allowance, incapacity benefit, unemployment benefit, and a load of other stuff. The whole NI system, in terms of paying money in and receiving state benefits back, is all managed using your national insurance number, or NINO as it sometimes gets called. The number is assigned to you shortly after you're born, but the likelihood is you won't even be aware of it until you reach the age of 16 and you have to start paying NI. An NI number is generally in the format of 2 letters, 6 numbers and another letter, so it looks a little bit like this. If you weren't born in the UK, you'll need to apply for an NI number. I'm not going to go into that in this video, but I will include some links in the description down below with a bit more information about that. There are essentially 4 different classes of NI, but as a self-employed person, the only 2 you need to worry about are Class 2 and Class 4. Now, the figures I'm about to give you are all based on the 2019-20 tax year, but do bear in mind they change from time to time, especially around election time, when all sorts of incentives get put into manifestos that are then completely ignored later down the line. Class 2 is the easy one. It's £3 a week and you have to pay it when you start making profits over £6,365 per year. You generally pay it as part of your self-assessment tax return. No idea why they give you a weekly figure. It's about £156 a year. The government have been talking about abolishing Class 2 NI for years, but for the moment it's still there and you still have to pay it. You can also pay it on a voluntary basis, even if your profits are under £6,365 a year, and I'll tell you later on why you might want to consider doing that. Class 4 NI is paid on profits over £8,632 per year. It's paid at a rate of 9% until you reach profits of £50,000, and then it drops to 2%. Having all of these different thresholds is incredibly confusing, and the sooner they align national insurance thresholds with your income tax personal allowance, the better. The key thing to remember though is that if you're self-employed, NI is based on your profits and not your turnover. I've made a video all about turnover if you're not sure what that is. I'll include a link in the end credits of this video and in the description below as well. Now, why on earth might you want to pay a tax voluntarily that you don't have to pay? Well, in order to understand that, you're going to have to fast forward to your retirement. At the moment, when you reach the state retirement age of 67, you're automatically going to start to receive a state pension of around £9,000 per year, so it's not to be sniffed at. The trouble is, to receive that, you need to have paid national insurance for at least 10 years and a minimum of 35 years if you want to get a full state pension. So if you work from when you're 18 until you're 67, that's 49 years. And of those 49 years, you need to have paid enough national insurance for 35 of them to get your full pension. Theoretically, you could have done that by the time you're 51 if you started working when you were 16. But do remember that you're not going to get your pension until you reach the state retirement age, and they keep changing when that is. If you don't have 35 qualifying national insurance years when you come to retire, then you won't get your full pension, and if you don't have at least 10 years, then you'll not get any pension at all. Interestingly, fun fact for you, the day of the week that you'll get paid your pension on when you retire is based on the last 2 digits of your national insurance number. Now, I'm not going to go into what makes a qualifying NI year in this video. If you're making more than about £6,500 a year, then that's probably going to be a qualifying year for national insurance. If you're earning less than that, then you might not have enough qualifying years. But the key thing to remember is that you can check yourself how many qualifying years you've got, and it's dead easy. All you need to do is visit www.gov.uk/check national insurance record with hyphens between everything, and from there you can log into the government gateway. You click on the little link that says check your national insurance contributions, and you can see straight away how many qualifying years you've got. As it currently stands, I've got 23 qualifying years, so I've passed the minimum of 10 years, and I need 12 more years of paying NI to qualify for a full state pension. The problem you might run into when you're self-employed though is that if you keep on investing everything you've made in the business and you never make more than £6,365 profit, then you'll never pay any national insurance. And that means you'll not build up enough qualifying years to get your state pension. So I would generally suggest, and this is certainly something that I do, is that even if you've not passed the profit threshold, unless you're really strapped for cash, pay the Class 2 contribution regardless, because it's only £156 a year and it gives you a qualifying year. I do have to say though, if they abolish Class 2 NI, I have no idea how that'll work. Before we finish off, I'll show you a couple of examples just to give you an idea of how much tax and NI you might have to pay depending on how much profit you've made. So we'll just run through some really rough examples here. I'll put this spreadsheet on my Patreon if you want to have a play with this, but please don't rely on it too much. I've knocked it up very, very quickly. And as you can see, it doesn't cater for any upper tax bands or anything like that. We're just looking at basically the tax bands that are shown in this kind of white box here. So we're catering for, as I say, 2019-20 tax year, personal allowance of 12.5 grand, income tax rate of 20%, all the NI thresholds that we've talked about. We'll talk about the payment on account threshold in a little bit as well, but we'll just pop some figures in here and we can see, based on the profit that you make, how much your tax bill is going to be and how much you're actually going to take home. So we'll start off dead simple. Let's say you've only made £2,000 profit. You can see no taxes due. We haven't hit any of the thresholds. You're going to have £2,000 in your pocket, basically. So we'll up that a little bit. We'll go up past the Class 2 threshold. So we'll say that you've made £7,000 profit. And you can see the only tax you're going to have to pay now is your Class 2 national insurance. Remember, on the 2,000, you can still voluntarily pay the Class 2 NI if you want. You don't have to, but you can voluntarily pay it. But once you've passed the 6,365, you've got to pay your Class 2, which is, as I say, £3 a week, £156 a year. So that is your only tax bill, and it leaves you with a take-home pay of £6,844. Okay, let's push it a little bit further. Let's say that you've made £11,000 profit. You're going to have to pay your Class 2 NI, and you've got some Class 4 NI as well. So your total tax bill now will be £369.12 for the year. But we've got no income tax due because we haven't passed the personal allowance threshold yet. So now, let's say you've made £14,000 profit. So you can see we're now above the £12,500 personal allowance, so you're going to have to pay some income tax. Your taxable income is your profit minus your personal allowance, which is £1,500. So you're going to have to pay 20% tax on £1,500, which is £300. You've still got your NI to pay as well. So your total tax bill would be £939.12. So as you can see, on £14,000 profit, you're only paying 7% of your income as tax. But if we just up that by £1,000, and this is where you're going to have to be a little bit careful, you can see our total tax bill is now £1,229, which is over the £1,000 for the payment on account. And that basically means you're going to have to pay this in tax plus 50% of that if this is the first time you've ever done a payment on account. The payment on account kind of balances out over time, but on the first time you ever pay a payment on account, it basically means your first tax bill is going to be that plus 50% of that. And that's shown over here. So you've got £614 on top of that, which gives a total potential tax bill due by the 31st of January of £1,843. So that is just something to be aware of. We'll maybe talk about payments on account in a future video. So let's up it now to £20,000. So on £20,000 profit, your total tax bill is £2,679.12 for the year, which works out at about 13%. So finally, we'll up it all the way to £50,000 of profit that you've made in the year. So your taxable income, £37,500. Total income tax due is going to be £7,500. Your class 2 and class 4 NI is shown there. And then once you add up your income tax and all of your national insurance, that means your total tax bill would be £11,379.12. Your take-home pay would be £38,620, and it means that overall your tax bill's roughly working out at 23% once you take into account all of the thresholds that we've chatted about. But as I say, just watch out for this payment on account, because if you suddenly jump from making £14,000 a year to making £50,000 a year, you've potentially got a big initial tax bill when you're paying that 50% on account for the following tax year. So there you go, folks. In a nutshell, NI is at 9%. You're going to need 35 qualifying years of NI to get a full state pension, and you can check how many qualifying years you've got by clicking on the link in the description below. Don't forget there's some extra stuff, including downloadable spreadsheet templates and whatnot, over on my Patreon. So if you think that might be useful, there's a link in the description below to that, and you can pop over there and see if any of that would be useful for your small business. In the meantime, thanks again for watching, and best of luck on your small business journey. I shall see you next time. Bye.